This presentation contains the current views and opinions of Moe Ansari, Chief Investment Officer of Compac Asset Management, a registered investment advisor. The views expressed are current only as of the date of this presentation and are subject to change. Nothing in this presentation should be considered investment advice, and nothing is personalized to any investor's individual circumstances. Compac Asset Management offers investment advice only after entering into an investment advisory agreement and gathering client-specific information about goals, objectives, financial status, and risk tolerance. This presentation uses terminology associated with technical analysis and provides charts to illustrate some of the concepts discussed. Technical analysis is a security analysis method with the goal of forecasting the direction of prices of securities or market indices through the study of past market data, primarily price and volume. We make no assurance that past performance or the use of technical analysis will accurately predict future prices. Further, a risk of technical analysis is that overfocus on historical patterns could lead to ignoring or downplaying security-specific concerns, overall market or sector concerns, or other factors because we assume inaccurately that historical patterns will repeat themselves. In no event is past performance a guarantee of future performance.
Hello, everyone, and welcome to the Compac Market Wrap YouTube update for December 16, 2024. I'm Moe Ansari, President of Compac Asset Management, and thank you for joining me today. Let's start with, first of all, click on the subscribe button so whenever I post an update, you will be notified. It is absolutely free. Looking at the numbers last week, S&P down 0.61% on the day. On the week, Dow down 1.78%. Russell, the small cap, was down the most, down 2.55%. And then we saw the NASDAQ gaining 0.36%. I think, again, interest rates jumped up last week. We're expecting an interest rate cut this week, but it's going to be a hawkish interest rate cut. What do I mean by that? I'll explain that to you in a second. Looking at the best sectors last week, communication services, that's Google, Meta, companies like that were the best ones, up 2.5%. While materials down 2.9%. I think there's a fear coming in that material prices will be moving higher. Oil was up a little bit, but interest rates jumped up dramatically. We saw a quarter point, 0.25% increase in the rate from 4.15 to 4.40. With interest rates for the Fed expected to cut rates, why are interest rates on the long-term bonds going up? That is the question so many people are asking. The fear is that inflation could be coming back if we see large amounts of tariffs. Goods and services, this is the purple line section right here. You can see in 2022 was a very large contributor to inflation. You can see that it was goods prices were coming down right here in 2024, but they're starting to gradually move back up. As we see tariffs come into effect, and that's what people are worried about, that the tariffs could be large tariffs. I think there'll be some kind of balance. They'll be selected just like we saw in the previous Trump administration, where we saw a lot of talk about tariffs, but in essence, they were targeted and they were selective. If we get selective and targeted tariffs, not blanket tariffs, 100% or some large number, I think those will be managed and they will not contribute. But right now, there's this fear that we are going to get these tariffs and they could cause inflation, and that is why interest rates are moving higher a little bit. A lot of data coming out. The big one is going to be the Fed meeting on the 18th. We get on Wednesday, we'll get some kind of decision from the Fed. Expectation is they're going to reduce the Fed fund rate by 25 basis points. But the long-term rates are not coming down. And there's the expectation with inflation, the chance of inflation going up next year, the chance for deficits going up next year, that the Fed might say, well, we've cut rates by 1% this year, but we are going to wait and see. And if Powell says that in his press conference, that would be because the market is expecting more interest rate cuts next year. But if the Fed comes in and says, well, we are going to wait and see, that might be what we call a hawkish statement, or a statement that, well, we are going to cut rates, but we're not going to be in a big hurry to do so. We're going to wait and watch before we get that, before we get some kind of clarification on what kind of deficits we're going to have. If we have tax cuts, the money has got to come from somewhere. Are we going to see tax increases in other areas? We don't know that. So that's what everybody, this a little bit of uncertainty is causing rates to go up, and the Fed might decide to pause interest rate cuts in the early part of next year to see the outcomes of these tariffs and what kind of tax policy we get. Looking at the technicals, the market continues to move higher. We're still at 60.22 is the 20-day moving average. 59.13 is the 50-day moving average. And we are trading right around 6,100 already this morning, right around there. We could come back up a little, come back down a little bit, but that's where the support is. The major support is still around 5,800. So about 300 points lower, which is about 3, 4, 5% pullback if we do get it. This is a wave 3, so we are going to somewhere see a wave 4, which is down to here or here, depending on what happens with tariffs and deficits. Those are the two things that everybody is a little bit concerned about. We're seeing the NASDAQ have a big day today, up about 1.3%. Support is 19,271 and then 18,732. On the weekly charts, continue to move higher, about 19,000 and then about 17,500 on the weekly chart. So we're pretty far away from support areas in the NASDAQ. We could see some more pullback in the NASDAQ and the broader market catch up, but we haven't seen a lot of that yet. Interest rates popped up as we had been right around this magenta line right here. We had been around here, but now we've popped up around here, come up to about 4.4 this morning, and that is 4.49 is the previous high that we made. If we get above that, then we've got resistance right here at 4.63, and then 4.73 is the next number that we're looking at. So as long as we're right around here, somewhere 4.5 to 4.63, if we can go back up a little bit, that could be a fifth wave high for interest rates and then start coming back down. But we are seeing a little bit of pressure on the upside, and that pressured the stock market last week. We saw a little bit of a higher, big down wave in the small caps last week, down 2.5%, as I mentioned. Today we're up a little bit, but we need to get above this 245 area. This is the high that we made about 3 years ago. We need to get above this high and break out to the upside. That's the resistance area. If we can break out above here, then we could get to 258 to 285, but that will only happen if interest rates come down. Crude oil was up last week, back down this week, nothing dramatic there. Gold market just right around the 50-day moving average. That's this blue line right here. We're 2684 and we're trading around 2670 this morning. So that's what we're seeing, gold going back and forth. And those are my thoughts. Again, I think what the Fed says, not what they do this week, is going to be critical for the markets. We might see a little bit of pressure if it is a hawkish statement, even though they reduce interest rates this week by 25 basis points. But if they come out and say that, well, we are going to wait and see, or we could pause interest rate reductions for next week, that could put some pressure on the market in the short term. But then we'll see what happens with tariffs and after the inauguration. Those are my thoughts. Again, don't forget to subscribe to this channel. Whenever we do an update, you will be notified, and you can come and see what I'm looking at, what I'm talking about, and what we're doing. I will be back with you next week. Until then, good trading.
This presentation contains the current views and opinions of Moe Ansari, Chief Investment Officer of Compact Asset Management, a registered investment advisor. The views expressed are current only as of the date of this presentation and are subject to change. Nothing in this presentation should be considered investment advice, and nothing is personalized to any investor's individual circumstances. Compact Asset Management offers investment advice only after entering into an investment advisory agreement and gathering client-specific information about goals, objectives, financial status, and risk tolerance. This presentation uses terminology associated with technical analysis and provides charts to illustrate some of the concepts discussed. Technical analysis is a security analysis method with the goal of forecasting the direction of prices of securities or market indices through the study of past market data, primarily price and volume. We make no assurance that past performance or the use of technical analysis will accurately predict future prices. Further, a risk of technical analysis is that overfocus on historical patterns could lead to ignoring or downplaying security-specific concerns, overall market or sector concerns, or other factors because we assume inaccurately that historical patterns will repeat themselves. In no event is past performance a guarantee of future performance.